G'day folks, welcome back to another update for natural gas. Now, longer term, monthly and weekly, there's still bullish momentum on the charts, but on the daily it's turned down below our moving averages, giving us a somewhat bearish move. Is that just a short-term retrace or is it going to bounce from there? We'll keep an eye on it. Before we go any further, make sure you hit that like and subscribe button, but also we're including some back testing to show you some ideas on how to trade. And looking into the outlook, as of today, June 25th, natural gas prices, the Henry Hub spot prices have risen to approximately $3.13 per million British thermal units, reflecting a 20% year-over-year increase driven by heightened summer cooling demand and slight production declines. Geopolitical risks, tensions in the Middle East, particularly threats to the Strait of Hormuz, have escalated concerns over LNG supply disruptions, potentially doubling European gas prices if the strait is closed. ETF performance, BOIL currently trading at 51.46. BOIL has experienced significant volatility with recent 4.5% drop, indicating short-term bearish sentiment. KOLD at 23.67 has gained 6.6%, benefiting from recent declines in natural gas prices. UNG trading at 16.25 reflects broader natural gas market trends. In terms of the outlook, EIA forecasts natural gas prices to average around $4.30 per MMBTU in the later half of 2025, influenced by increased demand and potential supply constraints. And investors should remain vigilant of geopolitical developments and seasonal demand shifts, which are likely to influence natural gas markets and associated ETFs in the near term. So looking at the natural gas price on the monthly, the first thing we look at is the trend according to the moving averages, and both the price and the CCI are above our moving averages there, giving us a bullish momentum. Likewise on the weekly, although notice the weekly is broken down so far this week below that moving average band, but the CCI is still bullish, so somewhat neutral positioning at the moment on the weekly. And on the daily, that's already broken down below our moving averages on both the CCI and the price. Now, a couple of things to note as well is before I move off these trends on these charts, on the monthly, we've drawn this fair value gap range down here, which means at some point the price will retrace back down to that level, very likely. It could take weeks or even months or even years to hit that range, so it doesn't mean you're going to go short necessarily today based on the monthly. Now, these fair value gaps back here have already been penetrated. This one back here has been penetrated, about 50% of it, and I'd like to see that at least 50% penetrated before making a decision anywhere. Back here, that was broken through as well with the wick of that candle. So at the moment on the monthly, we've got this fair value gap that still hasn't been penetrated, so just keep aware of that. On the weekly as well, in terms of fair value gaps, that one very short term has been touched with that wick of that candle. If I zoom out, you can see there's another fair value gap there that hasn't been touched yet, and that coincides with this monthly one here. On the daily, however, we've got this fair value gap that's been created recently in the last couple of days, and that hasn't been touched yet. So very likely we might see a retrace back into that range. I don't trade these, I'm just looking at it as a potential retrace or a move at some point. And if I zoom out, you can see we've got that another fair value gap down there as well. All these other ones have been touched and penetrated in that range there with those periods. But at the moment, predominantly bearish momentum at the moment. The first thing we look at is the momentum, and that's the bearish momentum on the daily. So if you go to the intraday chart, look at the 1 hour chart as well. Before our last video, we did say if you're going long during this period, according to the daily trend, you would have at the very latest closed out when the daily broke into that moving average range. Now, you would have lost a bit of profitability with that bearish candle on the daily. That's why we look at the intraday, the 1 hour time frame in this case, so that's probably a reliable time frame to look at. We did have a bearish divergence, so if you're following this going long, during each of these periods where we got lower highs on the CCI versus higher highs on the price, you would have started potentially taking your profits off the table. Now, one thing to do is, how do you ride that? First of all, you've got to be aware of this bearish divergence, but the way to trade that and to get out of it safely is as soon as you see it break through that moving average range, like it did here, and you start seeing the moving average range bend down, so you would have got out somewhere in that range there once that moving average range bends down. You can see there the moving average, the price still remained above the moving average, even though we had a bearish divergence, and then get out of it once it starts bending down. So you would have got out probably one of those candles there. Now, since then, the price has been declining in a bearish mode, and at the moment, the CCI is slightly neutral to and the price is still bearish, but moving towards that moving average range as well. So taking predominantly short trades from here once that breaks below as well on the CCI. In terms of a back test, what I've done, I've gone back here to the 15th or 16th of June, and this is the back test for the stop loss approach and the average down approach. So you would have been going long during this period, and like I said, you would have closed out your positions to paying attention to the bearish divergence first off, and then closing it out once you see that break through that moving average band. So the stop loss approach generated up until there, you can see there's no more trades happening on the short positioning. The stop loss approach generated $260, and the average down generated about $4,180 with a few multiple entries made during that period. One thing I didn't mention as well, just going back to the hourly chart, we had these fair value gaps down here, and you can see they've all been penetrated. We drew those in our last video, and the price actually broke down and hit that range. So just be aware of that on the larger time frames as well. Again, doesn't mean on the daily it's going to go down there in one linear direction. It could actually bounce a few times, and could take days or even weeks to reach that range. And more closely here on the hourly, we've got these other fair value gaps up here. I'll mark them as well, starting from the top there, and we'll go down to, you can see that one there has been penetrated with that candle, so I'll take it back to that area. So that's what we expect the price at some point. Again, doesn't mean it's going to happen in the next day or two. That one's probably mostly filled, but if it does go up to this area, we're going to see the price break through that area anyway. So that's another fair value gap we need to be aware of with those little ranges up there. So for BOIL on the monthly, it's bearish, well below the moving average band, but notice we've got some fair value gaps up there which haven't been touched yet. So it's a very long-term play, of course. That could take years to play out, so don't go placing long orders based on that. On the weekly, likewise, those fair value gaps, but notice the trend is somewhat neutral. The price is below the moving average, and even the CCI is broken to a bearish momentum, so probably turning bearish on the weekly as well. So just be aware of that. And that was after this bullish divergence. We had higher lows on the CCI versus lower lows on the price, and it bounced, but it didn't quite go high enough to hit our minimum target range. Again, we've got those fair value gaps on the weekly. On the daily as well, first off, the fair value gaps up there, which also coincide with the monthly and weekly, and we've got a bearish momentum at the moment on the price as well as the CCI, even though it's consolidating in that range. Could bounce up and down above those moving averages. You can see the moving average range is very narrow. We want to see those bands expand to be more convincing of a bearish momentum. But it looks like it's actually following this diagonal trend line to the downside on the daily. If we go to the 1 hour chart, we can see there it's bearish momentum at the moment, so you should be taking short trades only based on that. Again, we had a bit of a bull run there on the hourly during that period on the daily as well. So you would have taken those little, probably 1 or 2 trades going long during that period as well on the 1 hour time frame. KOLD on the monthly has got a bearish momentum at the moment with the moving averages, the price broken below the moving averages of the price as well as the CCI, although it's not really drawn much there anyway on the CCI. But notice we've got these massive fair value gaps up there. Now, that could take years to play out on the monthly, so don't go panicking yet. At the moment, still bearish on the monthly. On the weekly, likewise, bearish momentum below the moving averages. And I can't see any fair value gaps up there. Those ones there have been touched or filled with these candles here. So there's no fair value gap there, and there's no divergence. And then on the daily, we had a bullish divergence here before our last video that bounced, hit our target range. That's our minimum 23-38% target range. Again, for those new or to refresh your memory, we draw that to the recent high, and that's at 23-38 Fibonacci level. You can see there that candle just touched that, and sometimes that's all it needs to touch that minimum range, and more than 90% of the time it touches that range before bouncing further to the downside. Now, where we are at the moment, it's slightly neutral, I would call it, because the CCI is broken above, but the price is just in that moving average range. You can see there, looking at that sort of trend, the CCI is pretty much flatlining, and the trend is slightly declining. So we might see a pullback to the downside as well sometime soon. Or if you're going to go long on the intraday time, I'll show that in a second, wait for that daily to break higher above that moving average range. So again, looking at the intraday now, that's gone higher there in the last few hours of trade when it broke above on the CCI. But again, I'd like to see that break higher on the price as well on the daily to be more convinced. Also notice as well, there's no divergence. Well, actually there was a divergence there, and these divergences are a bit tricky to see sometimes. You can see there they've got higher lows on the CCI versus lower lows on the price. And these very narrow divergences have a more volatile break to the opposite direction. So when you see that happening and you start seeing the price or the CCI bouncing, it means it's going to go a lot higher. And they usually have more volatile movement than some of these longer term divergences have. The other thing to notice as well is there's gaps in there, and see those gaps, they're fair value gaps. They've been penetrated quite easily in that rise in the last few hours of trade. But notice as well, we've got more gaps here. And what does that mean? That we're going to see a price break to the downside again, very likely in the coming hours to fill those areas. So we might see a bit of a choppy ride for KOLD in the coming days, possibly similar to what it's been doing in the last few weeks. So UNG is a bit different to the natural gas price. It's got, on the monthly, it's neutral positioning with the price below the moving averages, but the CCI breaking higher. So we may possibly see further upside on UNG. And up here I've got the blue box here. That's a divergence target range. And the red boxes up here, or the red rectangles, they're fair value gaps, and that coincide very closely. Also with this moving average here, you can see that one there. So we might see the price rise up to that level sometime, and that could take years. You can see this is a very long-term play. We had a bullish divergence here versus lower lows on the price. Again, it bounced, but it's retraced back down to the downside. The CCI is still bullish. That's a slight positive, but again, a very slow-moving retrace. On the weekly, both the price and the CCI in a negative or a bearish momentum, both below the moving averages. And that was after this bullish divergence we had, in opposed to the lower lows on the price. Again, there's that fair value gap, and these are independent, by the way, but there's a fair value gap there, fair value gap for the weekly. On the daily, again, pretty much a consolidation at the moment, but somewhat bearish with both price and CCI below the moving averages, the first thing we look at. And can't see any fair value gaps in these areas. They've all been filled nicely, but predominantly consolidation phase at the moment for UNG. If we go to the intraday chart more closely, what we're looking for is any divergence, and there's no divergence that I can see. It broke down below the moving averages on both the price and the CCI, so you would have been taking predominantly short trades in those last few hours of trading. But again, notice here I haven't marked them, but we've got some fair value gaps here that have all been filled. And then more recently, we've got these ones here, which have not been filled yet. So we might see or very likely we're going to see the price in the next few hours bounce slightly to the upside, which is going to be consistency to the consolidation we've seen on the daily. So if you're new to trading and you would like a deeper dive into a simpler explanation of the analysis, we are now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.